Okay, so today I'm going to be teaching you guys risk on and risk off. You guys should know the 4 steps by now, but if you guys don't, we're going to start from scratch and then show you guys how to be risk on and risk off. So we're going to mark up our highs and lows on the daily time frame, right? So if we look at the daily time frame here, right, it looks like so far we close inside this daily candle. So that means we have an inside daily candle. So this is going to be my inside daily high. All right, I'm just gonna set an alert here, and this means this is going to be my inside daily low. Set alert, inside daily low. Okay, now this is just off a larger time frame. If we look at the previous days, this is the previous day, right? We had an inside day. No, sorry, that was on ES. So we have this inside daily here. We'll also mark up our previous day low and our previous day high. And then I'll show you guys on ES what I meant about the inside daily in a little bit. Give me 1 second. It's going to be previous day low right here. I'm going to set an alert here. And this is going to be my previous day high right here. Okay, so just off a larger time from here, I know what my range is, right? So if I'm going to come into, like, for example, this was today's candle. So let's say today, we're coming into today. We got to find the highest point from the prior day. So in this situation, the highest point was 30,787 and the lowest point was 30,092. What does that tell you already about your range? That is a massive range. So when it's a big range like this, over 700 points in a single daily candle, you want to be risk off. It's not when you want to put on risk, right? Because now it's a massive range. Your stop loss is going to be wider than what you're used to. So in these type of situations, you're going to be risk off, right? Let's break it down to the 4 hour, see if you guys see a little bit better. So on the 4 hour time frame, we came to retest this gap here, the new week opening gap here. We held the 4 hour low, right? We'll just mark this up as our 4 hour low. Why is that my 4 hour low? Because that's the last down move that caused a break above these highs here with the gap up. This is external. We didn't break below it. We broke internally this order block. It came to retest it with the 4 steps. I'll show you guys. Step 1, break. Step 2, order block imbalance. Step 3, fibs. And then step 4, retest. And then you can see retest the 50% and reject it. So even if we were to look at this, right, when this did happen, you identify your range. You know your lowest point was 29,873. Your highest point was 30,977. That's 1,100 point range. Is still massive range. So how can you go from being risk off to risk on in these type of ranges? So if you're going off a larger time frame, it's a risk off setup. Now, if you're breaking it down to small time frame, redefining your entries on smaller time frames, you could be a little more risk on depending on the time frame you go and the confidence you have. So let's give you an example. Let's press replay. Let's do it here, right? So off a larger time frame, we know that this was a retest zone. That doesn't mean I'm automatically going to smack it, right? So I'm gonna draw my fibs again so you guys can see what I was talking about. I can draw it from my high to my low, and then I'm just gonna label my my 50% right here. All right. That doesn't mean, hey, smack it as soon as we tap. I'm gonna show you guys what I mean. Because in this situation here, if I was to smack it right away, I'm risk off. I'll do small size because I know my high is up here, and that's my invalidation on the 4 hour time frame. So what can I do? I can go into my hourly time frame and see what's going on. So if I go into my hourly time frame, I know that just simple highs and lows, right? This is my lowest point. I can backtrack this to the highest point before it pushed down. So let's just go from here, up, 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 up. Okay, we know it went down, it went up, and then down that broke the low here. So we knew that this here was the hourly high, right? So we know that if it stays below this hourly high, what does that mean? It doesn't want to continue higher, right? It wants to break down lower. So as long as it stays below this, we know that's confirmation to continue lower, okay? Now, like I said, the 4 steps, what piece of confidence can you add? Now, we knew the 50% on the 4 hour was there, so right? So all we wait for is a tap there. We wait for the hourly to close below, which it did here, right? As you guys can see. Does that mean you smack it right away? No, because your risk can still be high. You'll still wait an hour to close to see if you're right or wrong. So what did we do that day? We broke it down into the 15-minute time frame. So the same 4 steps over again, right? We knew we had a rejection here, but same thing, take from the highest point and follow it backwards. The same way we did from the low back up, follow from the high back down. So let's say this is our highest point, back down, back down. Okay, I know this was my lowest point before we broke above, right? Before we continue break above. Actually, it'll be this low here. This is the lowest point. I don't like using the same candle that causes a break. What do I mean by that? If you guys look here, we had an up move and then push down. This candle was the one that broke above. I don't like using the same low. So I like using a lower low. So in this situation, this would be my low. And as you guys can see, it held that low once and twice, right? Okay. So now you start thinking, okay, do I take a setup here? Do I smack it right away? No, because I'm gonna have to wait a whole hour. That's a lot of risk. So how can I minimize my risk here? Okay, we now broke on the 15 minutes. So you do the same 4 steps again, right? So my range was, remember, my range was from the 4 hour, all of this was my range. So here to the low here, risk off, right? Risk off. And then if we go on the hourly range, my range minimize from there to the lowest point, right? See how I'm crunching down my range, right? So I can minimize my risk here. So, okay, a little bit less risk, but still pretty wide, 30,576, and the lowest 30,269. That's give or take almost 300 points, right? So what am I going to do? I want to keep refining it down and keep finding the same 4 steps over again and more confluence. So if I go into the 15-minute time frame here, we see we have a break. Okay, so then I start thinking, before the break happened, did I have any gaps left behind that we either tapped or we left unfilled? So in this situation, you guys see this imbalance here. Let me move this here because it's not clicking. This imbalance here, right? What happened before the break? It came to tap it, right, to fill it, and then broke. So then now, do I take it on a 15-minute? I can just go to my 5-minute too and see if I can minimize my risk even more, and being risk off to being risk on here. So let's go into the 5-minute time frame here. So let's say you missed it here, you waited for the 15-minute confirmation here, right? We're now waiting, even though the 15-minute broke to the downside, right? The 15-minute broke to the downside. We can look at a couple more confluence, the same 4 steps again. Step 1, break on the 15. Step 2, order block imbalance. Step 3, fibs. So for me personally here, we broke on the 15 and we know that this was the last down move. It pushed up, then pushed down, and then we broke above. So for me, we're bullish on the 5-minute here, right? This could have just been a retest, but then what happened? It came and it broke here, right? Why didn't I long this? Because I waited for the 15-minute to tell me it was going to hold or it's going to turn bearish. So the 15-minute turned bearish, which meant the 5-minute also turned bearish, right? So do you guys see the break here? So what's the same 4 steps again? Step 1, break. Step 2, order block imbalance. Step 3, the fibs, and then step 4, a retest. So now in this situation here, my risk went from being from the, let's say from here, right? Just give or take here on a retest, from here to target my low here, all right, and then waiting for a whole hourly candle close. That was my risk. It went from that to being just this now. So then let's go into the 5-minute here. I wait for a retest into here or an imbalance tap. So then my risk is very minimal. Now I can be risk on here. My stop loss would be a 5-minute close above this high, a 5-minute close above this high. Why is that? Because like I said, if we follow it backwards, right, from the lowest point back up, find my highest point. This is my highest point before we cause the break to the downside. So then my risk goes from entry, let's say entry here, to now all the way down here. So you see how now my risk is very minimal, right? In this situation, 482, give or take 505. I'm only risking 25 points in this situation, right? 25 points to make roughly 210 points, right? Do you guys see the risk reward there? So then we wait for a retest. Let's see if we get the retest. It's either a retest into the 50% or a retest into the imbalance. Let's see what happens. Okay, there's your retest, right? So you wait for your retest, and then like I said, your risk rewards here, right? Your first take profit, it's going to be monthly open. If you guys watch the other videos, you guys know monthly open, daily open, weekly open, act as support and resistance. So let's take our entry here and we target the monthly open down here, right? Let's see what happens. Boom, TP1 hit. So then, right now, this is a risk-free trade. So, you know, now your entry was here, your risk is nothing no more, right? You let your runners run, you take your partials, you either get stop break even here or just let it do its thing. And then let's press play, see if we get all the way to our low. Boom, 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 boom. You would have got stop break even here, right? But even at this situation, you are risking give or take, what was it, 20 points, 25 points from 480 to 505, 25 points, and your first take profit was 412, which is 70 points, right? That's still a 1 to 3 risk to reward. Amazing risk to reward. That is when you can be risk on compared to being risk off from here to here, right? And this is how you identify your ranges and you identify how much you're going to risk. And at this point, I believe you guys should already know how much each contract is. Well, if you're doing one NQ, right, one contract is going to be $10 per point. If you're doing one MNQ, it's going to be $2 per point move, right? So depending whatever size you're using, what contracts you're using, you already know, okay, if I'm risking 25 points, if I'm doing 2 contracts, right, 25 points times point contract is $2, $50. And then if you do 2 contracts, that means it's $4 per 25 points, right? Or $4 per point move. So times 25, you do the math, right? $100. So that is how you identify your risk to reward. 25 points to make, what was it, 200 points. 200 points times 4, that's $800, right? Beautiful. $100 to make $800. And that's when you identify how to be risk on and risk off. Hope that makes sense for you guys. Let's go ahead and just delete this. Let's see if we can find another example. So this is actually another prime example here for me, right? So let's remove this. We won one and we lost one last night. So last night I took sells aggressively. I took sells aggressively on the 1 minute because ES broke the downside, and I just trailed my stop because I knew we were approaching the lows. So here in the situation for me, I went ahead and took the risk because we had this buy to sell model, and I saw that we rejected here, right? We kept rejecting, didn't want to get above. We had broke this low here. We broke, and I initially didn't want to short till we broke below the low. We broke the low, we took entry here, and as soon as we hit, it was almost like 40 something points. So I was able to do 10 contracts on here because it was such a quick momentum trade for me, knowing that if we get below the monthly open, it was going to be momentum for a nice move. So as soon as we got below the monthly open, I just kept trailing my stop pretty aggressively, and that's how I ended up, making pretty good money on that trade. Now, where was I risk off? I re-entered sales again, being risk off, because I'll show you guys again. I was targeting the 4-hour low here. I was playing the 15-minute setup, which was here. I was playing the 15-minute setup from here. I remember my fill was 30,500. So I was targeting the 4-hour low. Make sure I mark it up again real quick. My 4-hour order block here. Cool. All right. So I had an entry at 30,500. Which is right here, and I was targeting, my stop loss was 620. All right, so the reason this is my risk to reward here, a little bit more risk off. Why? Because it was a 1 to 1.5, 1.2. So for me, it was more risk off, but I was already deep in profit. So what I did here, instead of doing 10 contracts, I did 2 contracts because I said, if we're going to reject from here, I'm going to shoot for another 150 points with 2 contracts, right? That's going to give me another, give or take, another $600, $700. So I was like, that's really good, and I'll risk $400 here, right? So that's how I ended up finishing green, and that's why I minimized my risk here, because I knew that the high here on the 15-30 minute was 620. That was a 120 point entry for me and risk, compared to the original other setup that we took earlier, right? It was like 3 points for me. So you need to know when to be risk on and risk off. So before you enter a trade, you need to see where your high is that would invalidate this setup, so you know how much to actually size in with, right? Because if you guys are just smacking, when you're just smacking just to smack, just because you want to make money, you don't know how much you're actually risking. So then when you start seeing the money, like, oh, down 200, 300, 400, oh my God, you start panicking, you sell that, and you don't let the play out, right? How many times have you been wicked out? A lot, right? And how many times did it still go your way it was supposed to go? A lot, because you didn't wait for the candle closure and you got wicked out. That's why you size down on bigger range. Obviously, you're going to have a wider stop, and you have to understand that, okay? Those are 2 prime examples, right? 3 prime examples, 2 wins and 1 loss. You're not always going to win. Nothing's 100% win rate, but you can always finish green or become a better trader if you can identify your risk, when to be risk on and when to be risk off. I really hope that helps, and hope you guys understand now your ranges. That's why I always say time frames work as a domino effect. The larger time frame, daily, 4 hour, is going to tell you how big your range is on those on for the day, give or take. And then the smaller time frame can give you an entry depending if the market structure shifted on a smaller time frame. You're like, oh cool, if it's just back up or down, then I'm wrong, right? And I'm only risking boom boom boom. Okay, this math is mathing, so risk on, fuck it, 10 contracts, 5 contracts. If it doesn't make sense to risk 10 contracts for 100 points, what are you going to do? You're going to size down, right? Because you're confident that it's going to go to your next level or to your take profits. You're like, you know what, worst case scenario, if I do lose, this is how much I'm willing to lose. You always have to know your range before you sit down, every morning. And before you enter a trade, know where your stop loss is so you can calculate how much exactly you're willing to risk on this trade, right? But that's pretty much it for this class on risk on and risk off. Pretty simple, guys. Like I said, I have a system, I have a process that I follow. It's the same 4 steps. Nothing's going to have a 100% win rate, but this does have a 90% win rate for me. I don't just smack it on the larger time frame when it hits the level. You guys saw I still break it down to smaller time frame. Why? To redefine it, obviously, but to minimize my risk so I can determine if I'm risk on or risk off and give you guys different examples there. But I hope you guys enjoy this video.